Hey guys, you've tuned into Money Control. I'm Manisha Gupta, and there's a lot happening in and around the sugar industry, and lots of events slated for this week as well. Starting with the sugar prices, first of all, and the international markets have come off its 2 month low, so there is some support that we've seen come in for those prices. Also, because the gasoline prices have been on the higher side, and there are cues coming in from Brazil as well. But it is the Indian markets where you need to keep your eyes on. One, we already know that sugar restrictions have been extended up to October 2023. That means that sugar is not going to be exported under open general category. So it's not under OGL, it is restricted. So what will happen is that all mills will have to approach the government committee, and based on those approvals only is when they can export. The good thing is that it is transferable. So if one mill has seen approval come in, another it can be transferred to another one. So that's a positive there. What the markets are awaiting is the quota for this export. Last year, we do understand that it was a record 11.2 million tons of sugar that was exported. This year around, given the kind of crop that we're looking at, the consumption at a record 27.5 million tons, and the opening stock at 6 million tons, the expectation is that we're looking at around 8 to 9 million tons of an export quota being allowed for this year. And that too will be done in two tranches. So one tranche is expected to be announced today anytime, which is expected to be at around 5 to 6 million tons. And then the government will take another cue by the end of January for a second tranche, which could yet again be 2 to 3 million tons, depending on what the kind of crop and crushing that we have seen. That's about sugar that the industry is waiting for. The other is about the ethanol. The blending for this time around has been at 10%. We actually have seen 10.1% of a number as well. But in the last few weeks or sessions, we have seen this blending come down to 9.7 to 9.8%. So the blending has declined. And there are two reasons for that. One, the ethanol pricing is something that the industry is still waiting for. The industry starts expecting ethanol pricing after the FRP is announced, which is the fair and remunerative price for sugarcane. That is a price that the sugar mills give as raw material price to the farmers. So once the FRP is announced, everything else is something around the value chain that the industry starts to expect. So we are still waiting for the ethanol pricing. The expectation is that you could hear it as early as tomorrow, that is on Wednesday, in a cabinet clearing, is when the ethanol prices could come in. Important point here also is that the sugar cane juice ethanol pricing, the industry has been asking for a price of 69 rupees per liter. The expectation is that you could be looking at a level between 65 to 66 rupees. When you look at B heavy molasses, the pricing there could be at 60.67 per liter, and for C heavy molasses at around 49.41. So these are the various pricings that the industry expects will be cleared tomorrow itself. Once that happens, you will see more dealing start in work of ethanol. One thing that the industry really seems to be talking about this time around is that the new sugar season starts from October and ends in September. This time we had late rains, late crushing that is just about started in various states right now. But the other thing that has also delayed is the ethanol tenders that OMCs float around in the market. That hasn't come in October at all. That is expected to come in November now onwards. So that is another delay that has led to ethanol blending and interest in ethanol from the sugar industry as well. So a couple of things that the industry is waiting for: one, ethanol pricing, and two, some subsidies for ethanol infrastructure as well, for the sugar mills to start investing more and more into this. The industry does say that they do not see any deviation from the fact that 20% of ethanol blending in fuel will be seen by 2025. That seems on track, but there are a couple of delays or hitches that the industry feels could be taken care of. But as of now, as I said, in this week, one, it's going to be about the sugar export quota, and two, ethanol prices. These are two things that the industry is watching out for.